All right, what's going on, team? So this is Paul McMillan II, and I'm going to do a little bit of training on how to get sniper entries based off of imbalances in the market, um, and some basic institutional market structure. But before I do that, I'm going to actually do something real quick. Be right back. All right, so what I'm going to do is I'm going to actually activate my replay tool, and I'm going to choose pretty much any area just to start. Let me do that to start anywhere. All right, so I'm going to start here. So what we're going to do is we're going to pretend that we have actually went through step one, which is mark up market structure from the 4-hour time frame from the 15-minute to the 4-hour time frame. So now what we're going to do is this is where we're going to actually identify the trend. And the way I identify the trend is that I look at the most recent low and the most recent high. So we can see that price went up into an uptrend quite a bit, created lower lows and lower highs. And so we can actually see here that this high pretty much wiped out this previous high, and so on and so forth. And so then we see that this created a lower low and then a lower high. So that's a clear indication that price is probably starting to go bearish at current price, okay? So then what I do is I go ahead and draw a trend line here and to say, you know what, price is probably going overall bearish. And then I put this as bearish trend line, all right? Now, let me do a few things here. Guys, all right. So now, I put that there, save my progress. And then what I do is I also look at the most recent high here, which is here. And this is going to be my break and retest point for a buy. And then I look at this wick here. This is going to be my break and retest for a sell here. Then once I kind of determine that, I turn on my higher high to low risk strategy to see if it matches up with that. And notice I'm correct. There's a recent high, the most recent high here, like I said, the most recent low. So then what I'm probably going to actually do is, this is where I put my X factor break and retest lines here, okay? And so basically the way this works is, if price break and retest past this high and goes up, then I'm buying. Because they're more likely they're going to fill this imbalance gap that this created. They already medicated up to this point, but they still got all this, all right? But if they decide to, because they haven't medicated any of this yet, so if they decide to bring price down and break a retest, and I know they're probably going to come down to this point to medicate all of this area. So then, once I do that, I save my progress, and then I turn off my higher high to lower low risk strategy indicator, and then I go to my order block indicator, and this is when I turn on the order block and the order block finder and the imbalance finder. We see order blocks here. Let me look at the imbalance finder. So now I have this turned on. This is perfect. So now we see that there's a little bit of an imbalance gap here. We can see the gray here. The gray on this indicator indicates imbalance gaps, okay? We can see that up here as well from this previous down move and all the way up to here. So my thought process is that what they probably, because they already mitigated half of this move here, since this imbalance gap is so close, a lot closer than up to here, they're probably going to come down and mitigate this area, maybe probably sell it down all the way down to the floor, so to speak, and then bring it back up, possibly. And then eventually bring price all the way up to fill this imbalance gap because we're gonna have to make their money back. That's what I'm thinking. But it could be the other way around. So then my thought process is to actually set my risk reward tools, okay? And wait for that clean break and retest. This will probably be take profit 1. And bring take profit 2 right here. And then that's going to be the risk reward tool for the sell. Now, price decides to buy up and it breaks past this and break past this break and retest line, and you already know I'm going to buy it because it's letting me know that once the banks break a retest and buy up, they're going to try to get all this as much as possible. It's inevitable. So this would be the take profit 1, take profit 2, right? So now, what we're going to do is just play this replay tool, see what happens. So it looks like they're grabbing liquidity in this area here. I'll probably pull this up a little bit more. Looks like they're bringing it down. See, it looks like they're bringing it up. Now, they might be medicating this area, then they might bring it up and they decide to bring it down, but we'll see. So this might be a sign that maybe it's selling now, maybe. But it's grabbing a lot of liquidity and I see a lower high here. So then at this point, I probably would be looking to see if price going to break a retest and buy it up. And so then at this point, they probably, now here's another thing to note as well. They already kind of mitigated half of this area by bringing it down to here. So they might be more focused on filling this longer imbalance gap that this created than this one here. So they might be moving on to that instead. Let's see if we're correct. Nope, we were correct the first time. Looks like they're probably gonna sell it, but we'll see. Yep, so they decided to get this after all. So I'm gonna adjust my trend line. All right, so everybody's bringing back up and a pull back, yep, and then it drops. So price came all the way down to this point. Now, at this point, it would have been tricky because if we would have sold this, let me see, from here, we might have would have got a decent bag here before it decided to pull back. I mean, we could have got a decent bag with this and then closed our first partial trade and then let the second trade ride, and it probably would have went back some that finally dropped. But it did instantly drop and filled up this area. So had we let that partial trade run, we would have eventually won that trade. So I mean, this would have been a good, decent sell to cut in. I mean, now here's the other thing to keep in mind as well. So let's go all the way back up to here. Now keep in mind, one of the things that I would have did, I would have adjusted my break and retest lines as well. Because you can see here that there was a new high here, even though it was equal to this, and that's fine. There was a new low. So I would have adjusted my break and retest line for the sell and put it up to here. Probably would have kept this maybe to here, just to kind of keep it sharp on the edges. Then when price busted through and started here, I would have had an earlier entry. So now price stopped here, then that's when it reversed, all the way down here, then that's when it reversed up, right? So then at this point, if I would have entered in earlier by adjusting my break and retest lines, which I already do, we would have caught a decent bag with this. This is over almost 600 pips worth of NAS before, and then we could have closed our first partial trade. But the second one run, we probably would have been a little bit of drawdown because price would have went up. And then all of a sudden price would have dropped even more. So that would have been a good way to trade that. Now what we're going to do is we're going to run the replay tool. And we're going to go to another area. So let me reset everything here. Let me shut this off. And then I want to run my replay tool and just choose any area. Let me pause this recording until I do that. All right, so here's another example here. So let's say we've marked up our market structure from the 15-minute to the 4-hour time frame. So now we're going back to the 15-minute and figuring out our sniper entry. So of course we're going to identify the trend, and we can see that price went heavily down to this next zone. And then it looks like they pulled back to mitigate this area. And now it looks like we see a lower low here. A lower low, this is probably the highest high that broke past the previous high. So it's probably safe to say that price is probably overall bearish at this point. So I mean, you could draw a trend line here. And then you could draw a note here. All right. So now, that's what I would have did. Very next thing I would have did is you know, locate the most recent low, the most recent high, which is here, most recent high here. So then I would be putting my break and retest lines here, down to here. That's what I would be doing. Now, once I did that, I'm going to turn on my higher high to lower low risk strategy to see if it matches up to that, which it does most recent, because this is a lower high, lower than this previous high. So it matches up with this, and then you can see a little bit of support here. So it's okay to put that there. So it matches up with that. So it lets me know that those drawings are pretty much accurate. But at this point, I turn on my order block indicator, okay? First thing I'm looking for is the imbalance. So turn on the imbalance finder. And then of course the order block finder. So we see a most recent order block here that made price go all the way down. So this created a huge imbalance gap. So they came back and mitigated all the way up until this point. So really from this point all the way to up here, there's a lot of imbalance that they have to fill. Okay, now that's off of this sell. Off of this buy up, when they bought it up to mitigate this area, there was a lot of imbalance resulted here, imbalance gap here. Okay, so now that we know that, I turn off the order block finder. All right, now I go ahead and mark up these areas. These areas could be used for take profit areas. That way I have an idea what the imbalances are. Do the same thing maybe right here, up here. And I probably would expect price to eventually come up to this zone since it started down here. So then now that I have these marked up, what I do is I turn off the imbalance finder, okay? And then once I turn that off, of course I turn on my Delorean EMA indicator. And then of course I set my alarms on my take profit zones. And then of course I put my risk reward tools in place. Price went down to here. Probably will try to shoot for some more. This will probably be my take profit one. Make this take profit two. That's probably what I would have did for this. Um, so that's what I would have did. Now, according to all these imbalances, now I'm gonna turn on the imbalance finder again. Now, one of the things I do is I kind of think like the banks do. If they're trying to make their money back, they're going to try to make their money back as quickly, easily as possible. So I kind of look at these imbalances and I figure out, okay, which imbalance gap is current price the closest to? Because they want to make their money back as quickly as possible and then go to the next imbalance gap that they have to fill. Now, this imbalance gap is close to current price. This one is probably a little bit closer, maybe the same distance. So at this point, if this imbalance gap was a little bit further down, then I probably would conclude that they want to fill this first since it's the closest, and then maybe send price back down again by medicating this area. But since they're both close to each other, I could imagine that it could go either way. Now, if price buys up, then of course I'm going to have my risk to reward tool for that. Probably will bring this up a little bit more. And this would be, probably would make this TP2 if I was traded. So now my thought process is, which area would be the easiest for the banks to sell off an imbalance gap to make their money back? This looks like this is a lot closer than this one. So they might buy it up to fill this, maybe go all the way up to here and come back down. Maybe come back and medicate this area and sell it down, possibly. But this one's kind of close as well, so it could go either way. But my guess is, since this is kind of really overall bullish, they're probably going to send it down. So we'll play the replay tool and see if we were correct. Okay, so they ended up buying it up, which kind of makes sense. This was a little bit closer than this one. So they're probably going to go ahead and just buy it up and maybe medicate up to this area. So then at this point, that would have been a decent profit so far. Let's see what else price does. Yep, so it went up. So then at this point, our first partial trade would have been in profit. Probably would have closed it by now. Okay. So yeah, so they came back and medicated at least half of this area. Makes sense. So we could have got a buy off of this, and then maybe close our first partial trade or the whole trade, because we don't know if it's going to start selling down. But they probably might medicate half of this area here and then send it down to get the rest of this maybe. We'll see what they do. Yeah. So mitigation. Yep. But thing about it is, price might actually still be going bullish at this point. So at this point, I would have entered out of the trade. And then if I saw my second partial trade was starting to, go to -$9 or $10, I would have pulled out and let price grab this liquidity here. There's a lot of wicks of liquidity here, so price might be buying up. But now it's starting to sell. Okay. So then at this point, and mind you, while price is doing this, I would have been adjusting my break and retest lines. And then at this point, I would have been looking for another entry. This is the most recent low here, most recent high. So now price broke this. So then I probably could have jumped in and sold this. So far, that's about 168 pips of NAS. Let's see what it does. And yeah. So, yep. And so then at this point, if I would have jumped in, 480 pips of NAS, that would have been a decent profit for the second partial trade, or a second trade if I would have jumped in the second time. Now they got to come back and mitigate this area, which this low wiped out this low. So that lets us know that price is still bearish, sorry. And this high wiped out, this high is lower than this high. So it lets me know it's still bearish. See? Take this out. And ultimately they sent price all the way down to get that there, which that probably might be done, but then they got to come back and mitigate this area. There's a lot of wicks. So now they're probably going to send it back up again on liquidity. And now they're bringing it back up because now they want to get all this out the way possibly. So now you got yourself another good entry. Real good buy candle there. Yep. They want to mitigate up to all this. Now they're going to come down and mitigate half of this area, possibly. No, they're probably going to take all this out, hit this up, hit up there. We're close to it. Yep. So, like I said, eventually they were going to come up and get that. But they did go bearish, like we said the first time. They went bearish down here, a little bit down here, but then they brought it back up. We're going to do one more example, and then we'll wrap this back testing session up. So what I'm going to do is just turn this off. So let me pause this recording. All right, so last example. So at this point, I have marked up the 15-minute to the 4-hour time frame and went back to the 15-minute. Now I'm looking at identifying the overall trend. We can really look at this trend and see that it's trending downward. It's not hard to see. You see that this low wiped out this previous low here. You see all that, and even it has done it here. So then at this point, I would say the price is bearish at this point. But then I look at this wick. This is what I would use to determine if price is shifting to a bullish territory, starting to buy up. And of course, I would use this wick down here to see if it's going to continue to drop like it's been doing in this example. So then I'll turn on the higher high and lower low risk strategy indicator, and so it matches up. You got a resistance here and the low and the support here. So that's accurate, okay? So now at this point, I will go ahead and turn on the indicator, the order block indicator. So now I'm looking at the imbalances in the market. So the most recent move we see here is down here and down here, create a lot of imbalance. So you see that right here. They did come back and mitigate up to here and up to here. So they came back up. So I mean, really they came back up to this point and then went down. So in this case, I think they would eventually come and get this. Maybe not right away, maybe. And then I will put my first take profit there, second one there. Just want to buy. Now, next thing I would do is I will find out where did this imbalance from. It came from this move here. So now they got to make up for this as well. They came back and medicated up to this point here. They still got all of this. So then now that I mark all this up, I'll turn off the indicator. So then at this point, I will put my risk to reward tools. That would be a good amount. Definitely good trades. So now that I've actually put my take profit zones as the imbalance gaps, then I would ask myself, which imbalance gap do you think they're going to want to fill first before they fill the next one? Because they could drive price all the way up and go through the trouble, try to fill the rest of this imbalance gap that resulted from this point all the way up to here, or they can make their money back faster by filling this imbalance gap from here all the way down to here. I'm thinking it's going to be a whole lot easier for them to drive price down and fill this imbalance and make their money back, and then start worrying about the next thing, the next imbalance gap, which is up here. That's what I'm thinking. But if price breaks and goes up to here, then I'll jump to the conclusion that price is bullish. So let's see what price does. So they're grabbing liquidity. Looks like it's buying up. Okay, so it bought up. So now they could be buying price up to mitigate half of this imbalance gap from this previous move as well. Now, if I had decided to buy this up from this point, I probably would have got me a decent pips of a buy. Probably would have closed my first partial trade at this point, and then, but guess what? I probably would have jumped out, because now look, price went all the way down because it was grabbing liquidity up in this area, and now they're deciding to probably sell it. And look what happened. So really at this point, I probably would have bought it, closed the first partial trade, and then if I saw price starting to pull back, and if I got into -$9 or $10, I probably would have pulled out. And then if price started to sell, possibly I would have sold again, or I probably would have just took my money and ran and watched this sell go to here, maybe. And look at that, it's sold heavily. So they had to come back and mitigate half of this imbalance here, get their money back, and then jump down, which makes sense. So that's why I bought up. Completely understand. So now you see why. And they eventually bought it back down. But I mean, it was a good sell. Would have made some money. So that's the one thing I forgot to point out, is that they could possibly bring it back up to fill this imbalance gap here and then drop it, because they did. Let's do one more example. Let's do one more. Let me pause this recording. All right, so this is the last one we're going to do. So let's analyze this. So let's say we've already marked up the 15-minute to the 4-hour time frame, and now we're back on the 15-minute time frame. Of course, we're going to identify the trend, and we can clearly see that price is bullish, bearish. No question, it's not hard to figure that out. So I'm going to say bearish trend line. Right now that we did that, then we're going to locate the most recent high and the most recent low. Well, we see that this low right there, this low here. So this is going to be the most recent low. So this is going to be my sell break and retest X factor line. For it to go bullish, I see this wick here. I would say here. That's what I'd be looking for. Then of course I'm going to turn on my higher high to higher low risk strategy indicator to see that. Doesn't necessarily match with any of these lines, but that's fine. I'm going to stick with that. But usually if it matches with these lines, and that means we're accurate, but it's close. It's good enough for me. So now, the very next thing I'm going to do is turn on the order block indicator. Turn this off for a minute. Oh, that's why I was doing that. Yep, so then I want to turn on the imbalance. Just give me a second here. All right. So now I'm going to say my progress. And so now what I look at is I look at all the imbalance moves that have been made from this point, and then kind of analyze where they probably, what imbalance they might want to fill next. So this is the most recent imbalance move here. So they're probably going to bring price halfway to mitigate this area, and they'll probably push it down and fill this imbalance here, maybe. But of course, there's a balance up in here as well that resulted from this. So I know eventually they're going to come up here to get this. So since I know that, I just draw a zone up to here. Just knowing that eventually they're going to bring it up to this point to make this probably the overbought resistance, which is going to be the roof. And then, of course, I probably will make this take profit. If price broke here, then I probably would make this take profit 1. Maybe this take profit 2, because it might just mitigate this area and go down. But if it buys up, then I might make this take profit 2 if it buys up. Maybe make this take profit 1. Yeah, that's what I'll be looking for. If it sells, take profit 1, take profit 2. Now, the very next thing I would be looking at is I would say to myself, okay, so which imbalance gap would they more likely want to fill first? Because you want to think like the banks do. The banks, whenever they make an imbalanced gap, because they made prices go up so fast or go down so fast because of the amount of money they put into that order, they need to make their money back because there's a lot of other orders that didn't get filled. So you need to think like they do. So if they see themselves profiting from one big imbalance gap move, but they also got into the hole with another order that didn't get filled, you want to start thinking like they do. And they're thinking to themselves, how can we make our money back as quickly as possible and move forward? So you want to ask yourself which imbalance move more likely they're going to fill first that's going to help them make their money back faster before filling the next imbalance gap. Okay. So one thing I know for sure is more likely they're probably going to mitigate half of this area to make their money back the quickest, and then proceed probably downward to fill this imbalance, and then eventually bring price up to here, possibly. Or if they could do that. Now they already mitigated half of this area here. Well, they kind of actually mitigated off this area here. Now they got from here to here. But they could reason, okay, we have an imbalance gap here. Let's just buy it up and just go all the way up to here and then just drop it. Maybe. But I'm thinking they're going to further drop this to bring this back up and then further send it down. Okay. So let's see what price does with the replay tool. We'll turn on the Delorean EMA. You see the yellow EMA is across the red EMA and is below the 50 EMA. So more likely it's probably going to still keep on going bullish with that as well. Let's see what it does. See, they bought it up a little bit halfway here, which is still half. Yeah, they bought up a little bit more. Yep, see, halfway, wick here, most of it. Now let's see what else they do. Now this area might be grabbing a lot of liquidity And here's one thing we got to keep in mind. They did come down and mitigate half of this area here. So they may say to themselves, you know, we sold this off, so let's go ahead and just buy it up and take out this imbalance gap and then worry about this later. We could do that. But we don't know for sure if price break and retest will go up here or vice versa. Let's see what happens. Yeah, so they push price up, which honestly, this might be a good buy, but it could be tricky because they may be mitigating half of this and then bringing it down too. So they're buying it up. So then we could have bought this. Yeah, that would have been a good, decent amount of pips. That would have been a good buy. Could have jumped out at this candle here. Yep. And now it's grabbing, yeah, it looks like they're buying it up. So they're probably saying to themselves, let's go ahead and buy this up and knock this out the way, and then we'll worry about this later. Oh no, it's gathering liquidity, okay? So let's adjust the trend line. So then I can understand why they brought it up to this point, because they haven't mitigated this area yet, which I figured. I figured they was going to bring it up to this point, bringing it down, and then build momentum to mitigate half of this. So now, grabbing liquidity. Now it's kind of pushing down maybe. Let's see if it sells down. Might, or they might buy it back up. But see, it's hitting a lot of liquidity with these wicks. Now it's starting to sell. Yep. Yep. But eventually they bought it back up, mitigating that area. And eventually they're, yeah. So what they basically did was to analyze this. Because of this imbalance, they medicated half of that, drive price to this support, pushed it back up to mitigate the rest of this, pushed it back down to create some more momentum, and then basically used it to fill this gap. Remember, I told you, more likely they're probably going to buy price up to fill this imbalance that this previous move did. So now, they got to mitigate half of this. But yeah, that's how I would have traded it. So I mean, you know, when price went up to here, this would have been a good, decent buy. Oh, this would have been a really good buy. Let me turn off the indicator here. Yeah, that would have been a real good buy. Yep. But yeah, so that's how we want to trade the 15-minute current price when we get done with our market structure markup. And then when price hit that direction, then we basically get in that trade because we know that they're trying to mitigate those areas. You want to always trade imbalance gaps. That's how you want to do it. That wraps it up for this back testing session. See you in the next one. Take care. Bye.